Hooty hoo, all my stock market gamblers. Welcome today. It's Friday, made it to the end of the week. What do we got going on today? Well, we're actually having a little bit of a down day. The Dow's down about 100, the Nasdaq's down about 200. I guess Snap reported earnings and they weren't very good, and that stock's tumbling about 30%, which is pulling the Nasdaq down. Okay, so what am I doing exactly? Well, I think that the market is going to come in. I think it's going to come back down. Now, we've rallied up about 10% off of the June lows, and the SPY rallied up to 400, and it filled that gap. At 400. I think we're close to the top of this rally. This is a short covering rally, and I think we're going to come back down and retest the lows. Now, if you look at the VIX, look at the volatility index, and look at the options on the VIX, the VIX, they will tell you that something really extravagant is going to happen in the market, and it's going to happen within the next 2 weeks, and it's going to pull this market back down, maybe down as much as 10% in the next couple weeks. Will that play out? I'm not sure. I'm betting on it. I've got a small short position on, and I'm betting that the market pulls back down to the June lows. Now, June, we had this low and we bounced off at 10%. I think we're going to come back down and retest that low, maybe even go lower than that low. That's just an opinion. I could be wrong. I mean, they could push this market right back up to new record highs from here. That's not what I'm betting on. I'm betting that we're going to come down and retest that June low. We'll see how that all plays out. So let's move on to the real estate market now. Now, today I want to talk a little bit about economics, a little bit about the recession that we're in. Now, the government will not tell you we're in a recession. They're going to postpone that for they're trying to postpone it at least till the midterm election. But if we get a negative print for the second quarter, which ended in June, and that print will be coming out in a week or two, and if that print's negative, that means we've had 2 consecutive quarters of the GDP declining, which by definition is a recession that we're in. Now, I'm sure they're going to change the definition here just to make it look like we're not in a recession. But, from an economic standpoint, a recession is defined by 2 quarters of negative GDP. And I believe that we've got that, and I believe that we are in a recession. Now, why is a recession bad for the housing market? Well, when you think about it, what is a recession? It means that we've got a decline in the GDP, and what happens? A lot of people get laid off. A lot of layoffs happen in big corporations. And I believe that these layoffs are going to be the high-end jobs, the jobs that pay enough to own a house. So now when you don't have a job to pay off your mortgage, what happens? Well, you can sell the house voluntarily, or the bank will come and sell it for you in a foreclosure process. Now, the banks, they're trying to make all kinds of loan modifications, all kinds of forbearance. They don't want these houses back. I get that, but at some point, the banks are going to have to face the music, because there's millions of these properties in forbearance that people are not paying their mortgage on. And these should normally, in a normal market, these would go to foreclosure and they would hit the marketplace, and that inventory would put downward pressure on the price of houses. But they cannot let the price of houses fall. Why? Well, what happens when all these foreclosures come into play, right? The banks end up taking the houses back. And the banks don't want that, but it creates pressure on the banks. The banks get into trouble. Some banks will even blow up. But you see, the banks, they're all tied together. All of them, all around the world now, they're all linked together. If one bank goes down, a major bank goes down, you're going to see kind of a domino effect where the banks start to go down. Now, banks just make me nervous. You go into a bank and you try to withdraw cash. I mean, I'm talking a little amount, like $2,000-$3,000. They always want to know what's it for. And that's really weird to me, because it's really not their business, in my opinion. But I just went in the other day and I took $3,000 out in cash. They had brought over the branch manager, and the branch manager's looking at me like he's, well, I'm not really sure if we have that cash right now. Well, you're a bank, aren't you? My money's in here, isn't it? Well, not really. Your money's not really in there. They don't have your money, and they're running out of cash, apparently. Now, I don't mean to start a run on the banks, but I just don't trust them. And now if real estate starts to come down like I think it will, well, the banks are going to be in a lot of trouble. And I think the banks are already in a lot of trouble from the commercial side of real estate. The commercial side on these office buildings, a lot of these office buildings are 20, 30% occupied. I mean, that means they're 70% vacant. And that means they're not bringing in enough cash flow to pay that mortgage number. The banks, they're hold on to some of this stuff. Now, pension funds, they also are in trouble because of these mortgage problems on commercial property. And nobody's talking about this yet. I think they're going to be talking about this a lot towards the end of the year because there's going to be a lot of defaults. There's already defaults. Companies like Blackstone and BlackRock, they own these skyscrapers. They turn the keys back into the banks already. And the banks, they don't want the properties. What are they going to do with them? Well, they're going to have this thing called a fire sale. There's going to be a fire sale of these commercial buildings, these office buildings. And you know what? There's going to start to be a fire sale in the housing market. The housing market can bring trouble to the banks. And now what happens when the banks get in trouble? Well, it creates more layoffs. Now you'll notice already that banks like Wells Fargo and Chase, they're already laying off thousands and thousands of people in their mortgage division. There's nobody getting mortgages anymore. Like refi mortgages, they're down like 80% from a year ago. All right, I mean, home purchases, they're down 50%. Do you realize that in June was the worst June we've had as far as the number of home sales go? You'd have to go back to 1988. I mean, nobody's buying a house. They've all come to a halt. It's come to a grind. Now, here's something interesting. Okay, so in a lot of areas, inventory has already doubled in just the last 3 months. Now, let's see what happened about 3 months ago. Oh, the interest rate on mortgages went from 3% to 6%, and this caused the inventory to already double. Now, I think it will easily double again by the end of the year, but inventory is going up, and nobody's buying houses. Now, what does this mean? It means that the housing market has come to a grind. It's come to a halt. The sellers, they want this much, but the buyers, they'll only pay this much. Now, what's going to give? Now, interest rates could come back down from, let's say they're about 6% on mortgages right now. Interest rates could come back down to 3%, 2%. I don't know. They could. It's possible, yes. But that's not where I think the break's going to be. Something's got to give because the houses are not affordable to the buyers. They want to buy, but they can't afford the house. So if interest rates don't come down, the house has to come down in price. Now, what if interest rates go up from here? What if they go from 6% to, let's say, 7, 8, 9%? What if they went to 12%? Well, what would that do to the price of houses? It would really send them much, much lower. Now, that's what I'm telling you. When you're in a recession, you get house market coming down, you get banks in trouble, you get more layoffs, which leads to more foreclosures, which leads to lower prices in houses. It's a vicious cycle. It's kind of a death spiral. Let's just call it a death spiral. Not to be negative, but that's really what it is. Now, how do you get out of the death spiral? Well, the normal way that we get out of it is the Federal Reserve comes in, and in a recession, they lower interest rates about 4 or 5% to get out of the recession and get the economy going back in the right direction again. Well, they can't lower it 4 or 5% this time because we're at 1.5% right now. You cannot lower it negative. You cannot lower it negative as long as there's cash left in society. Because if you went into the bank and they were paying you a negative interest rate on your money, meaning they're confiscating your money, well, you'd take all your money out and just keep cash under your mattress. So going negative right now is really not an option for them. So what's the other option? The other option is they're going to print a lot of money trying to reflate the bubble again. Remember back in 2008 when the housing market collapsed in the subprime, the Federal Reserve came in with trillions and trillions of dollars to pump up the market, to reinflate the housing bubble. And they have been successful at reinflating the housing bubble. The housing bubble is now bigger than it was in 2008. You see, I don't think that the market ever flushed out in 2008. The crash never really happened because the Federal Reserve came in 2009 with $4 trillion, and their goal was to reinflate the housing market. And it worked. I give them credit there. It worked, causing a much, much bigger problem now that we're in. If we had let it crash back then, we'd be well on the road to recovery, but now we still have to go through the crash that people will tell me that's not coming. Well, I know in your area there's not going to be any crash. And if you want to listen to people like Ramsey, like Susie Orman, like Barbara Cochran, they'll all tell you that this is the best market to buy a house in. If you want to hear warm, fuzzy stuff from your local real estate agent, they'll tell you prices are never going to go down because people always need a place to live, and that's a reason to buy right now. Get in right now before the prices double from here. That's what you're going to hear from them. But I don't believe that. We're going to see this come down. This is going to come down 40, 50, 60% in houses. Now, you can disagree with me. That's just my opinion. And you're entitled to your opinion. If your opinion is that they're going to double, I respect your opinion. It's possible, I suppose, they could print enough money, but I don't think the printing of money's going to work this time. Look, the last time in 2008 it did work, but now the printing of money, it's just like, I don't know, it's like pushing on a string. It's not doing any good anymore. We printed so much money, and believe me, the amount of money we printed so far is going to be nothing compared to the amount of money we're going to print in the future. Look, we're $31 trillion in debt, and that's just the federal debt. That's not the state debt. That's not the personal debt. That's not the corporate debt, and that's not the unfunded liabilities. You add those up, you're close to $200 trillion. But the amount of money that they will have to print to make houses go up from here is 10, 20, 30 trillion dollars just to get the houses to start to go back up. I don't even think it's going to work when they print that much. I do believe that they will print that much, and I do believe that you will see gas prices skyrocket. I do believe that you will see food prices skyrocket, but at the same time, I do believe the housing market will come down. Once again, just my opinion. Anyways, if you enjoyed this today, it's Friday. Give me a thumbs up on a Friday. Why not? Because we got the weekend ahead. Hit that subscribe button so we can talk again next week. Bye-bye now. I'm Tall Mike. Bye-bye.